Okay, can you hear me there, guys? How you going there, Lauren? Quite a bit to talk about today, I'm assuming. Like I said, I'll probably have a bit of a rant today. Not a rant, but nothing bad. I just the importance of management and risk management. There's days like today that it's very important. Anyway, let me know if you can hear me, guys. Probably got a few people in at the moment. Looks like it's never quite important for people to come in and talk when markets are down. All right. All right, we'll just get into it. I'm assuming you can all hear me. Um, Welcome to Trade Setup, the live stream for the 11th of October. For anyone that's new, welcome, and I hope we're all holding up today. We've got a top left-hand corner, you'll see us on Twitter. Just join us on Twitter there. Top right is on Facebook. It's our Facebook page there, but the bottom right, just subscribe to us at YouTube. That's our channel down there. It's at Trade Setup AU. If you search Trade Setup, you'll come up with the channel then, and you'll see our little logo, which is this little logo here. Um, all right. So today, like I said, a bit to talk about. I'm just going to have a bit of a rant about knowing your risk and knowing your stops and why it's important to know what's happening in the global, the macro view. For anyone that's just been trading shares, your traditional share traders sort of get lost looking at individual stocks and forget to really keep an eye out on what's happening in the global picture, and look at charts like we do, just going over different charts, just so they know what's happening with the macro picture. Um, Look, it's like I said, it's probably not that important 99% of the time, but there's days like today and your GFCs and what happened at the start of the year when you really get caught off guard. Um, if you don't know what's happening and when to tighten up your risk management or when to potentially take some profit off the table, rather than just let things run, it's really just managing your exposure overall. And also on the flip side, it's when to potentially go short as a hedge. It's not just about buying, holding, and then staying in until things turn around and get stopped out. There's a lot more to it, I think, trading and managing positions than just buying and holding. That's why that's investing. It's not trading. Trading on the flip side is it's about probabilities. Now we've been talking quite a bit about what's happening in the US, what's the global picture, because it just doesn't look flash. And you know that when the US is going to raise rates and bonds are starting to tick higher, bond yields in particular are starting to tick higher. So that's the cost of holding US dollars. So the cost of, pretty much everyone's holding US dollars, each nation, each Federal Reserve, we are, China, um, what do you call it, Japan, got massive amounts, emerging markets. So the cost of holding US dollars or funding that debt is going up. So that's going to put pressure on across the board. So it's only a matter of time, really, till you start seeing some cracks appearing. And that, as people were talking with yields above, what, 3%? Um, it's been above 3% for a couple of days now. So it's taken a while just for, I would suspect, for a lot of markets or a lot of players just to catch on and know when the party's finished. And you can see that, I'm not saying it's finished just yet, but I'm saying that you've got to understand, you've got to realize what's happening in the macro picture in order to manage your risk on a micro scale in your shares, or know where you're going to place your stops. I mean, it doesn't mean you have to go and close everything out, but it could mean that something's gone quite hard and you've upped quite a bit. We were up. I think CDA is one we got stopped out of today. Wasn't happy having the risk too wide in these conditions, so just tightened it up. We got stopped out. There's another one that actually looks quite good. We're up quite a bit TER. Um, Happy with that one, but we still got to stop because you never know what's going to come about over the next week or so. What is this going to just continue on lower? Are we going to get hammered? Is the US going to get hammered? Because the moves nowadays compared to 10 years ago is a lot different. These moves can be really savage when all the markets are loaded to the hilt, especially in the US, loaded on the long side. Because at the moment, for the last few years, the only place to get yield was been in stocks. Now that's changed. That's changed where yield going forward, anyway, from this point going forward, is not really in stocks. It's not going to be, you jump into some stocks in the US, you jump into your traditional Nasdaq stocks, your what do you call them? Your Googles, your Amazons, all those sorts of things that have been your tech stocks. That's the word, that have been really doing well the last few years. Going forward, are they going to have the yield you want? Is it worth putting your money into that market and risking a potential collapse? Whereas you've got the US are starting to raise interest rates, so they're going from a very low base, potentially going to raise another three or four times in the US. So there's going to be money that are going to flow into bonds out of whatever asset they're in, and generally people are in stocks over there. So it was really a matter of time until we got the cracks appearing, and you get these bigger days like over last night, Dow down over 800 points. So in saying all that, not diving in head first into a bunch of stocks, not holding it and just a buy and hold mentality. I think that was proven that it doesn't work before the GFC. I personally know a few people who were just we ended up getting out of some when it was back in the broker days, getting out of a whole lot of stocks, not getting in because it didn't look that great. Um, it was not a fund, but an MDA accounts, managed accounts, didn't get back in. They left us because they said we should have been in. They got loaded to the hilt, and of course we all know what happened over the GFC. Now that was just managing risk. You're never going to be precise on the exits or the entries, but that's not the game. The game is getting in, taking a chunk out, and getting out, and just knowing what your overall risk is. Not individual stock risk. That's one thing, but it's knowing what your global risk is, or um, well, basically macro risk. So I'm just going to go over. We'll get over our stocks now. It's pretty easy just going here, isn't it? Markets, indices. Um, so what we've got, we're down TER. That's down. Where am I? Where am I? What am I trying to do? Thick. There we go. That's our. That's been a cracking performer. We still got our stock quite wide on that one because I think that's weathering the storm okay. It's getting bought up a bit. Now we've got that. That's okay. I mean, we're up on that one. Doesn't bother me too much. Wes Farmers. I wish that took a nosedive a bit more, but we managed to lock in a partial on that. Probably going to be looking to drop the stop a bit there because I think if this market's going to tip over, it's going to go hard, and this is really not going to look back. It's probably just going to drop. But we managed to book an extra 3%, 2% today, thereabouts. I think at 48.10 was the open on our partial. So that was, we missed the partial by 2 cents yesterday at 48.52, which was nice because we actually, in hindsight, it was nice because it actually gapped down on the open. We got another 40 cents. So that was handy. The other ones we've still got Molly, which is actually holding up okay. And I'm not minding that in the face of what's happening to the overall market. We're down 109 points in the ASX. That's actually not a bad sign as long as this market starts to find potentially some bargain hunting, pop it up a bit after big down day today, and I think Molly could kick on, but we'll see how that goes. It's not hurting too much. We've got RBL, which is actually just ticking back into positive territory for us at 73.5, 174. That's got some buys in there, so that actually looks good. So the quality, it's important to know your quality setups in times like this, and um, I guess I don't want to rant too much, but I'm just trying to get across that. I remember speaking to someone a while ago saying that they don't really see the importance of talking about in the stream of what's happening in the global economy, what's happening in the US, what's happening in Europe, what are bonds doing, all that sort of stuff, because of just individual stocks they're worried about and looking at the fundamentals now. It's always those outliers, your GFC, like the start of the year, your Asian crisis, like we saw overnight, the 800-point drop. You're going to get smacked no matter what your fundamentals are saying. Your fundamentals could be the best thing in the world. A lot of them will get, and they have been. A lot of stocks have, even if they're positive, they get gap down on the open. They may bounce, they may not. I mean, if we'll look at the ASX in a second. If that continues to sell off for the next few weeks, which it could potentially do that, we've broken a key level at 6,000. Sooner or later, people are just going to give up on it. If they watch this market, drift lower and lower and lower day by day, it doesn't matter what your fundamentals are going to say. It's going to be people are going to be exiting, running for the doors, locking in bigger losses, but potentially what they should have if they had. I don't want to say too much, but proper risk management. And risk management is the most important thing, and it's sometimes it takes a bit of work. Like I said, knowing what your global market's doing, that a lot of the times is potentially meaningless. Not meaningless, but it's not really, you have a pullback, it doesn't really hurt your stocks, and then it turns around and goes back up, that's fine. But knowing if there's some major potential major swings going to happen, which are going to catch the whole market off guard. I hope you're understanding where I'm coming from, guys. But um, any questions? What just chatting about then? How's everyone holding up today? I mean, I'm guessing most people, the portfolio is going to take a bit of a hit, but that's the nature of the beast. There's another thing just while I'm while I'm in rant mode, is talking about stops. I hope most people understand exactly how a stop loss works, even if you enter on a stop, what the trigger mechanisms are, what a limit is, what's the difference between a sell limit and a sell stop, and a buy limit and buy stop, and so on and so forth. So I know there's been a few people caught out when I spoke to someone today. Unfortunately, they were trying to sell BHP on stop. Now, if you just got a straight out sell on stop and you put it below the market, that's going to trigger. As long as the market opens anywhere below your stop level, that's going to trigger. Now, there's no way to change that unless there's a different order, which you generally only do in, I guess, direct to market products, platforms, and then you probably pay a bit more of a premium from them, like a stop limit. You can enter on a stop limit, and that's where, say, for example, if we got this red bubble, if we're looking to enter short on this one at 165, but we're scared that if it does gap down at 150, for example, we don't want to be short. You can put a stop limit. So stops triggers at 165, but if it doesn't activate, if I don't enter short between 165 and 160, it cancels the whole order. Okay, so basically a sell on stop is, as soon as that's triggered, it goes to market. You sell at market. So the system does not care where the market is. And it's unfortunate, I think they had BHP, which actually triggered the sell, triggered about $1 lower, which is, like I said, things like that are going to happen when the overall market's down. Like the Dow's down over 800 points overnight. We're going to open lower. There's no doubt about it. So it's really prudent to just make sure, if you're trying to enter, make sure that you do know what's happening. Just wake up, flick on the news. You got up until 10 o'clock till the market opens to just delete out an order. If it's an entry, especially if it's a stop, if it's a stop loss, that's going to be a bit unfortunate if you're going to get slippage. But like I said, we do have good, guaranteed stop losses also that you can use, you can implement. I mean, they do cost a little bit more than a stop, or they do cost some money once they're executed, but in days like today, it's probably well worth it. Anyway, that's a bit of a rant. So what we'll do now is just go on to, we'll look at the ASX. Let's just get up where we are. The problem is with the ASX at the moment, we've been looking at this 6,000 mark. I mean, if for some reason we actually get back up again and close above 6,000, it's more the weekly charts that I think are broken down. So I was discussing with Davin yesterday. We were talking about it. He was a bit bearish on the market, which is all fair enough. I wasn't bearish, but I would, before starting to load up on the long side, I wanted to see it hold up at 6,000. Now, after waking up this morning and see the Dow down 800, I thought that was well and truly off the cards. To see if it was going to hold up above 6,000, spend a couple of days soaking up, a bit like what we're seeing in this action. Let's get over here. End of day, weekly, thick. There we go. I'll get up my drawing charts. Screen snapshot. Here we go. So the problem here is what we've done, is we've just about broken. I mean, it's all fair enough. We've broken the anchor for that little weekly pop-up. So you've got this leg up here, pull back, pretty much this grind in the last stages of that run, which we can see. We're going to call that a bit of a bear flag, bull flag, who knows the technical term. And then we've had our one little pop-up, two moves down. Now, I'd feel that we'd have to finish up above 59.50 or thereabouts, which is, what are we down at the moment? 59.37. So the market to pop up 20 or 30 points into the close. For this to have a chance of holding up this weekly trend up, Otherwise, we could potentially be looking at a weekly down move, and you could, which I'll go through and maybe on the monthly charts, just have a quick look. So I'm obviously would not go near any. I wouldn't be jumping into stocks right now. I mean, you can see the weeklies pressing down. It's broken through that anchor at 6,000 or just below 6,000. That was the important level. We blew straight through it on the open today. We're holding still below that, below the 59.50 zone at the moment. Um, I don't want to sound really scaremongering or bearish or anything like that, but there's a good chance that if this holds below and we get some more weakness coming in a couple of days, the next couple of sessions in the US, um, this could be driving a fair bit lower down to 5,700 or so on. So, but it all sort of dependent on what happens, well, by the end of this week, because it's a weekly close. So you got today, tomorrow. If we can sort of pop back up, hold up here, around that 6,000 zones, and then over the next few weeks on the weekly chart, it has to be your weekly candles. You want to see some action where it's soaking up and it's absorbing around the 59, 50, 6,000 zone to really want to put any more risk back into the market. Otherwise, if you're looking at the hold up and you're looking at the daily charts can pop up, hold a high low. You jump in, you load up on your risk into your stocks because you're going bargain hunting, and then the weekly just turns around. You get a couple of days up or whatever, and then the weekly turns around, and next week, bang, we get another 800 point down move on the Dow. It dries down to 5850 or 5800, and you just got caught. So it's really prudent risk management at the moment. We don't know what's going to happen here. So if we take a look back on the weeklies, the monthly, this is going to look really, really scaremongering. Sorry about this, but we've got to talk about it. This is sort of the trend. That's your monthly trend. So are we going to? We've had a pop up here, a little bit of a double top here, a bit of a pullback. That built. We've had another big leg up here, a weekly correction there, or your monthly correction. So that's your corrective action off the 6,000 level. Then we've had potentially. Have we had this leg up? Are we going to go into some more of a corrective phase? Your monthly support is right down at 58. So we could drive down to 58 on the weekly and then chop around, hold up, and then go again. Or we could have this big pullback to say 5,400. Who knows? And then start to hold again. We just don't know what's going to happen. So looking at the overall charts at the moment, we're at the crux more on the weekly chart than anything else. The daily's pretty much blown through that support at 6,000. So it's more the weekly charts. Are we going to hold up at 6,000 or not? Which, in essence, would be of that leg up there. So you can see all those green candles. We've retraced probably 55, 60% of that move up. And I mean, if we do reject and we hold around that 6,000, 59.50 to 6,000, that's, it's a potential Fibonacci level. We might get some grind back up again. And then this leg could continue up to the highs. Not saying we won't, but it's just trying to assess all scenarios. And at the moment, I'll draw that up. That's where we are at the moment. That's your trend up. Whether we're going to hold this trend up and continue on up to 68, or whether we're going to break down, then you've got another level way down at 58. So again, it's just around this 6,000 mark or 59.50, which we're right there now. We're at 30, 59.30. It's just got to keep, beware of what's happening on the global perspective. If we go through this, I would suggest if we trade down to sort of 58, 58.50, this leg up may be correcting, and we could be looking for a really decent pullback to that 54 zone. But all we can do is just sit and wait and see how this plays out. Any questions just on those, what we're looking at there, guys? Anyway, if not, we'll continue on. We'll just take a look at what the Dow's looking like. I'm assuming it's looking a bit ugly. I haven't looked at that just yet. And why aren't I looking? Well, that's nice. This changes. So I don't know why this changes during the day. Let me just get watch list. I want gold stock major markets. There we go. I'll get that. So that's your Dow. No, that's not, is it? 9th of October. So it hasn't updated the. Well, that's handy of them, isn't it? So they don't want you to know what the last candle's looking like. The Dow, I don't know where it actually closed. It's quite a big. If we go back to the Dow, dropping off 800 from here, it's probably somewhere around this support zone um, on the Dow. Actually, let me just see. No, I haven't got it up. Sorry, guys, I'm a bit unorganized today. Let's just see if we can get up. Picture of the Dow. Yeah, we'll take a look at those in a second. JHX. Just if you've got anything else to look at, guys, just chuck in the codes there, and we'll start filtering through a few. I've pretty much done nothing today in the way of trading. I'm just watching the markets. I was looking at some intradays today, but then you see everything is just gapping down so hard, it just makes selling or buying quite hard. And the psychology of today, that's probably something we could touch on. Where do we want to go? There we go. So this is the Dow, and that's a massive move down. Okay, but just to put it in context, it's still longer term trend up is somewhere around there, for instance. So it's no reason to. Everyone's running for the doors. I mean, we're all expected this run up to lose some momentum to say heat to come out of that market for a while, and that's just what's happened pretty much overnight. You've got that breakdown there. Um, the market's been pressing up, and obviously last night it got hammered, and pretty much everyone's looking at the same charts, and we've really just we popped our head through that level there. So from now, what we want to keep an eye on, if we can hold some sort of base, there may be a bit more downside, say 24,800 thereabouts. There might be some more downside in the coming days or day. But it'd be interesting to see if we can just sort of pop up and start to build. It's going to have to take a lot of work, a lot of effort, and a lot of patience from everyone. Whoop. Just go. I don't want you. There you go. Yeah, like I said, a lot of patience, but this Dow is not looking like. I mean, I wouldn't. For me personally, I'm just going to be sitting on the sidelines watching what's going on, assessing the markets. We've got a short on. We've got West Farmers. If anything pops out, we've got Origin. We've got an eye on, which could potentially be a short. Um, Not a bad idea looking for some shorts just as a bit of a hedge. And it's more of it's look at potentially. I wouldn't say too late just now, but especially if we from here have a sharp bounce, I'd never. I don't want to get involved. So if we just sort of bounce from here, then I'd be skeptical that we're not just going to build from here and then that sort of thing. Well, if you can see that, where we're just going to sort of sharp bounces, that bargain hunting, jump in the Dow, pop up, and then I'd be a bit worried that we're going to build a lower high, and this could be another major leg lower. You just don't know what's going to happen. So we just have to keep an eye on what's going on in the overall markets. The ES, that's the E-mini, pretty much the same look about it. Oh God, look at that. That's your most recent longer term trend up. We're right there now. I'd say there's probably this potential moves down on the downside for the Dow. It could just sort of get a bit choppy over the next coming days, weeks. The S&P, you'd want to see it hold up here. There has been quite a bit of heat. We might see this type of price action what we saw last time. It got sold off quite heavily, straight down to that support zone, and then bounced quite heavily, and it's come back down, retest it. We spent a lot of time working its way out. It's been a good part of 6 months to a year, probably 6 months. What was that low from? March, where we pressed up to only just recently. So it's March, but 7 months of this rally. So it may take us a while just to work out, and then we could build again. You don't know. So just be wary of what's going on the global scale, on the global markets in the US, in Europe. Let's just go to see what the DAX is doing. So they got hammered. Let's look at that. They're right down at that zone now, potentially going through that zone. The monthly charts looking potentially rolling over as well. Got a lower high that's pretty much confirmed on the monthly, weekly. These lower highs are holding. It's that level that's just broken through that support low at 11,726. Just closed below there last night. The daily is looking very weak. The weekly, if it doesn't pop up, say tonight, tomorrow night, that's going to show some signs of weakness too. It may have just washed it out, popped back up, but we'll just keep an eye on that. FTSE, not quite as bad because your key level is down at 68, so 69. But again, the overall markets are just looking obviously weak. It's just how weak, how much they got on the downside, how much room to move. And like I said, I just don't want to repeat this over and over again, but just be careful. You're going to start loading up into some stocks right now. It's prudent just to, if you're not in, sit on the sidelines and wait. You can't go wrong if you're buying when the market's rising, but you can go wrong if you're trying to pick the bottoms. Um, there is a saying, a Chinese proverb, but I won't say that. Anyway, let's get into it then, guys. So we've got JHX. Anything else that you want to take a look at? Anything else, guys? I mean, maybe we'll just go over the sectors. We can go over, have a look at quickly look at the sectors, what's performing. If there's any sector that's actually weathering the storm a bit. There we go. There's my sectors here. All right, so that's the consumer staples. That's big sell-off, but I mean that overall trend is up. That's a bit of heat coming out of the market. Potentially, if we can start to hold up here, monthly, it has had a good run up too. It's pressed through the highs. That's your monthly charts. Yeah, on your monthly, I mean, a fair bit of heat could still come out of that market. The weekly's had a big press lower. Again, nothing. You don't want to be jumping into that sector there. That's it's a consumer discretionary. Again, same sort of scenario. Energy's got a good little level down here, so we may see. I mean, depending on how it goes, APT. I'll have a look at that too. I don't think so. I think if this market continues lower, that could get squeezed. Any longs could really get squeezed out. Every man and his dog knows about it. So if they do know about it, they're either in or on the sidelines. We'll talk about that in just a second then, Laura. So this one's XEJ Energy. That's longer term trend is up. We've had this sort of candle before. Heat's come out of the market. At the start of the year, same sort of thing. It's just how far we're going to drop, whether we're going to hold up above that 11,500 or we're going to wash it out. I don't know. Potentially we could hold up here. I don't mind this sort of shape. It's still got a bit of work to do. And don't forget this is a weekly chart, so a weekly candle. Got a few weeks, I think, before the energy sector can actually hold up and continue on. Financials, not looking very, very flash hot at all. Flash hot, looking very flash. I was going to say something, not very hot at all. But that's pressing lower. No reason to be in those just at the moment. That's your healthcare. That's taking a bit of a battering on that as well, because that was quite, exposure to over in China is what's concerning people lately. That and the fact that it's gone so hard. There's a lot of heat to come out of that market. So that's, some area you don't really want to be in. I wouldn't want to be in anyway at the moment. This is your information technology. Don't even like that, to be honest. Again, so everything's looking very much, I'd say, materials. I'd be looking at that sector, but I want to see some really positive setups. I'd rather buy when the market's actually starting to build a base into some prime setups rather than, again, trying to pick bottoms. But that's your monthly. Look, a lot of them longer term have been, obviously with the ASX pressing higher, have really been lifting quite strong. So we might just be due for an overall correction, or it's got to do what it did sort of the start of the year, pop up, lower high, retest the lows, hold the lows, and then everyone's getting a bit more confidence to start jumping back in when we start edging higher again. XUJ, that's utilities. That's not looking flash at all. You got high up here, lower high, lower high, lower high still in force at the moment, up until we start to hold, and you really want to take out that high at around 78.50. If we can start popping up and breaking up at 78.50, then we've held a higher low potentially on the longer term charts at 76, and this could be something to look at. but at the moment it's not. XT telecommunications, that's longer term trend lower. Looks like it's just off a lower high now, potentially getting reconfirmed, rolling over. This doesn't look good at all. Potentially a good place to short, but we'll keep an eye on that. Gold, not a massive fan of gold. I know people like to. It's a traditional safe haven, but I don't see it as it's not a yielding safe haven. If there's not enough people buying gold, I think it's more your retail would be jumping into gold at the moment. Especially, it jumped $5 last night. But what is it going to give you if there's not enough numbers jumping into gold and buying gold stocks or buying the physical gold as a hedge? Well, then it's just not going to work because it's not giving you anything, is it? If you buy bonds, potentially you're buying bond futures, and that's driving up the yields. Or if you're a fund, you're buying the physical bonds, you're getting yield on it, and at cheaper prices, the yields are bigger if you're buying it in the futures market too. So there's reasons to buy bonds. It's going to give you yield, whereas gold's just a tool, I guess. Um, unless there's enough people buying into it, which I don't think there is. I think it's mainly your retail traders at the moment looking for that to be your traditional safe haven, because all the books are saying in times of crisis, buy into gold. I mean, that could pop $20 tonight. Who knows? But I just don't see it. I just don't want. I wouldn't want to be jumping into gold at the moment. You can see that on these charts. There is a few gold stocks which are not looking too bad. This could, on your gold anyway, this could turn into be a lower high on the longer term. This is your weekly. Going onto your daily, this doesn't look good. I mean, you can potentially get in a lower high at 48 off this low at, what is it, just under 49. So this could press lower. If we trade down to 46 from here, this could really roll over. I just don't think it's got enough oomph at the moment, but we'll see. It's worth keeping an eye on it because it is a traditional, people buy into times of crisis into gold. Your gold stocks, if the Aussie dollar gets belted too, gold in terms of Aussie is going to go up. Is that right? Yep. If gold, physical gold, holds at, what is it, 1200 now, and the Aussie goes down, then Aussie gold is going up. If that makes sense. So that makes some of the, if you're looking for some sort of hedge and you're buying the stocks, something looks good on it, say SAR, Evolution Mining, or some of these stocks, OGC, potentially looking quite good. As long as they got a good setup and the setup's a prime, high probability setup, then yeah, go for it, I guess. Whatever that is, emerging companies, steer clear of that at the moment. And industrials, yeah, I'll still be steering clear because it's just a big down candle at the moment. All right, let's get into it. Enough of my ranting, but JHX, let's look at that. Let's go over here. So either way, I would just be holding off on anything new at the moment. I mean, there's times when the market is sort of drifting higher, you can get in your prime stocks, but if something looks to be setting up, just be aware if the overall market's, it's not just a correction, but it's more that what we always fear in the market is that everyone running for the door, that I wouldn't say euphoric, what's the other, just scared, fear that's driving the market lower. When fear's driving it lower, generally everything comes under attack. It's really hard to find any quality setup. You could be chipped in and turns around, fear grips, and then bang, everyone's out. Because pretty much if you've got a memory, if you've been in the market for a while, or if you haven't been in for that long, you probably don't remember what the GFC was like. I mean, that was just getting crucified day after day after day. And no one really knew why. It was just, well, we knew what was going on, obviously, by the end of it, but at the start, you didn't know what was happening, why it was getting hit, and then that fear just grips, and you just want to be out, take the loss, reassess it. If that grips the market, then I don't think there's any prime setups at the moment, but we'll just have to wait and see what the ASX does. We just want to wait and see if we can base out, if we can hold up, so on and so forth, and then start to look for your prime setups. Now, JHX, horrible. Yeah, what I don't like about it, you can see the way it tips over, and there's no need to even look at the daily chart on that, because that's just, it got pounded. I know it's open down, it's a green candle for the day. That doesn't mean anything. It could just be bargain hunters, and the US drops tonight, then they get squeezed back out again, and we take out the lows and just continue lower. It's got a minor level around that 1900 you can see from back here, but that's only minor. That's from that low there. It's just Oh, that's not what I want to get. Go away there. Let me just draw that. That's James Hardy. So if you're going to look at some sort of trend, you really need this to start holding up. And the fact that it's pushed down, that always gets me wary, because anyone that's pure technical, if you're looking at these sorts of things, that's broken. That's going to get you a bit nervous. The fact that it's accelerated in, you can see the last couple of weeks accelerated into that level. Look, it's going to get a bit choppy. It could get a bit choppy, but you really, if you're looking at this weekly chart for a potential buy, you need something like this, and it's going to take, look at that, 4, 5, 6 weeks, 7 weeks to play out before you can get potentially it's drove into that level, maybe pop up after a few weeks. It might edge down into that level, come back down, retest, and then start to lift again. If it starts to lift on the weekly, then you can probably drop it down to a daily to get a nice higher low to work from, and then work off your entry. But in saying all that, the way it's drive down into that, even if it just goes boom, boom up, wouldn't go near it off a daily chart, because I mean you could, but I would prefer to be working off solid levels like this, whereas this is just working off this rising support line. I don't think that's a clear, solid support line. I think if you're looking at, you need to be in something or you want to buy something, just look at something else. The way this is drove down, the way you can see it's pressed up, had a good correction. This next level, it did get up through that high quite a bit. You can see that, about, what is it, this distance here, it did get up quite well. This next move up, it's only really got through the highs a bit. That was a major double top. So it just seems to be struggling at these levels. Then we had a bit of a pullback. So it can't get through, especially on this second one. It only really got through that high and then retested that and then fell away. And it had to have a deeper pullback. So it's come back to this trend line. Well, it's basically built that trend line there. And then it started to lift again. But it pretty much come from such a low base, it really couldn't get through those highs at 23 clear at all. It had one go, pressed up through, straight back, below that level, pressed up again, straight back below that. They'll have another go, and then pretty much capitulated from there, which is what we've seen the latest drop from around that 24 mark all the way down to about 1950 at the moment. So, like I said, if this is looking like, if it's going to hold up here, it has to hold up. And for me, I have to see something like this. I want more than enough confirmation. And by the time you get something like this, you probably find the ASX is holding up. Now, if the ASX is not going to hold up, this could just drive down in one foul swoop tomorrow. The next couple of days straight back down to 17. Then you just do not want to be in it at all. Or potentially looking down to 17. There's no reason why it can't go down there. I hope that helps. Just keep an eye on things at the moment. So what was next? We'll take a look at APT. We are down, just as a side note, we are down at, we are stretched on the weekly chart down at this sort of support zone around that 19 level. That doesn't mean it's just going to hold up. That could just mean that we stay overstretched. And anyone who didn't sell it here, they were holding on, that's come back down here. I mean, if this keeps heading south, you're going to forget about technicals and you're just going to bail. I probably would anyway. I'd be sooner or later, I'll be hitting that bid if I don't get my chance. I mean, if I don't like this and I was long from somewhere above here and I don't run stops and I just get out manually, I would be inclined, I'd be searching for that lower high, and I'd be potentially, if it pops back up, and there's going to be a lot of people, if it pops back up and stalls, then there could be that secondary move that takes you straight down through to 17 or even lower. You never know what's going to happen. APT. The problem with APT, it's just a confirmed lower high. So if this is a lower high, let's go to the daily actually. Now let me just go. This is Afterpay. So this has been everyone's darling. You can imagine holding this. And don't forget, when everyone's talking about it, generally that, I feel, the trend is over. It's happened. You don't want to get in when everyone knows about it and everyone's talking about how good a stock it is, because I've never really seen a stock that waits for the news before it kicks off. If everyone thinks it's good and they're going to do this, this, and this, you're not going to wait to be proven. You're always going to jump in and take the risk. That's what trading's about. So the market basically factors in ahead of time anything good that happens. Now, if it doesn't play out, bang, it gets hit. If it doesn't come to fruition, then it gets hit. And sometimes it can get hit even if it does come to fruition. We've all seen that before. The market can press up on news, and once they come out with that positive news, like everyone expects, bang, you get this sell-off. You get people booking profits. Now, if it's better than expected, then you might get it holding the highs and start to potentially, lift on the news, then starting to chop around at the highs and starting to build again as other people build a position. Other longer term traders potentially build a position and look for that extra run up higher as if it's undervalued, whatever fundamental reason why it could kick off. Um, so in saying all that, everyone knows what APT is doing. They Afterpay, they seem to be popping up everywhere. Ah, oh, good legend. Now that sell at 20 was a cracker. I missed that. we we were in this way back when, and I don't even remember when. We were in this a long time ago, so I look like an absolute idiot. We got out well before 10. We went around $5 when that started looking good. It started to lift around here somewhere. Don't know why we got out, and I don't know why I missed it. I can't tell you. It just something you kick yourself about. So that the entry we looked at and when we got in was more of the unknown. We were entering in the unknown when the charts were looking good, when no one was really talking about it, when you're taking the chance that this is really good. There's something that we don't know that maybe others know that it's starting to build a good story. And that's when you want to be in. You don't want to be in when everyone knows about the story. It's just had this big run up and then we start, this big move down as profit taking. Doesn't matter what the story's saying. Right here would be, if we don't hold up here, let me just clear that chart. Let me just take a new chart and draw this up. So this is ideally what you'd want to be seeing. If it doesn't hold up here, I think it's over. I just think there's too many people potentially, what do you call them, baggies that are holding it that could provide the fuel to get squeezed out of the market. It really, for me, it has to hold up at 14 if I've got any long-term prospect of if I want to be in it. Okay, and I'd even let this have a pullback. If it bounces off here, it could build another lower high, and then you're going to get those people who are going to jump back in because it's APT and they missed out the first few times. They've maybe missed out here. They've missed out here. Um, there's people that would have bought it up on this little run, bought it up, but for me, that's just not a setup, especially on the weekly charts. I don't know what it was showing. Was this a daily? This is your daily chart. So there was no setup after this move down for me. Buying on that break there, I didn't see that as strong. I wanted to see, you really do want to see when the market pops up, if it's strong, you shouldn't get this kind of pullback. We popped up here. If it was a strong market, you shouldn't get a pullback nearly to where, that little leg up started. And I'm talking about this little pop up. If we're going to buy it, you want to see this type of thing. It holding near the highs, that's sign of strength, and then buying on when it starts to rally. Otherwise, when it continues all the way back down, it comes back down to here, you don't want to, I just don't want to buy that. And I didn't see that as strong price action at all. I saw that more likely to actually clean out a few people, and then, which is probably what's happened, cleaned out a few people, cleaned out a few of these buyers. Anyone that's bought it on this little pop up here, if they haven't got out now, they probably got out today. If they haven't got out, there's a potential they're still there as fuel to get squeezed out of the market. Does that make sense to you guys? So there's just so much fuel in here, so many buyers that have bought it. We squeezed out the first lot potentially. If they haven't, they could be about to get squeezed out. Um, we've got people who bought it up in this run up. They're potentially fuel to get squeezed out of the market. So, and that's all, I guess, dependent on the overall market finding more weakness. And if it finds more weakness, I don't see this holding up at 14. I sense that people could be running for the stall, running for the gate, running for the exit, whatever it is. So really, for me, if you're looking to buy it here, this level is key. Right where we are now, around what, 14 bucks? Around 14 bucks. It has to hold up here for me. And by holding up, I mean, I want to see a weekly. I don't want to see intraday, like a daily high low. Actually, no, I do. This is a daily chart. I keep forgetting. I want to see this market as pressed down to 14 So this, if it retests here and starts to hold, I want to see this type of price action. Maybe it's squeezed down. I want to see these sellers jump in, but then you're seeing it soaked up. The buyers are soaking up, and they're soaking up above 14, potentially 14 and a half or 15. They're soaking up that continued selling pressure. So if you're watching it, that gives you reason to believe that we're going to, as soon as we break out of that sort of contractive phase, when I'm saying lower highs, lower lows, lower highs, higher lows, that squeeze, if we can break up to the upside, then I think that could drag in some buyers. And then there, it's just about knowing what your risk is, managing the position as you go. All right. APX, let's get onto that. Yeah, same sort of story here, I'd say. APX, Appen. They're holding that zone there. And look at the volume. It's not massive today, but off the weekly, just drill down on that. We'll just flick onto the daily. So that's your daily chart, but really the weekly is what we're concerned about. That trend up has been quite solid. You've got this trend up here. And I mean, if we're going to contract, we could easily, drop back to this support zone. This is off your weekly. So you've had legs up here, pullback, contractive phase, a rally, expansion, contraction, expansion. We're into contraction at the moment, so we don't want to guess, just sit there and buy at the bid at $13 because you don't know where that contractive phase is going to finish. This could go all the way down to 11 for all we know. You just want to start looking again at this level. It's pressed down to, a zone. You want to see that pop up, hold a higher low, because then you've got some sort of confidence that you're not the only one thinking it's a good buy and starting to load up into it. But don't forget, anyone who bought it here and it's still holding, then there's more people that bought it again at the same sort of zone. They could be fueled for this to get squeezed out. There's a bit of a stop run and for it to drive lower, potentially through that, was it 13? Drive lower and then start to hold a high low. And then you'd really be sitting there waiting to see what happens from there as well. Then you have to go through the same process. Look for a level, look for it to hold up, look for some high lows. If we can drill in on it, you'd ideally be looking for something like this, a higher low to work out, or something ideally like this, exactly what happened back in April. We've got this little pop-up corrective phase. You get this good little run up, a pullback, a selling come in, and then buyers soaked it up at earlier levels. It just touched on the MAs and started to lift. So if you bought it there, that would have been prime. You've got this rally. You've taken a bit of heat occasionally. You probably took a partial up here, and then it's had a good corrective phase again. And you can see this little, it's just an inside level, very minor level, probably a bit harder to trade. But you can see a couple of red candles, a couple of indecision. It went sideways for a bit, and then boom, off she went. And that was off a little small double bottom. Does that make sense here, guys? So that one again, it goes in the books of just watching from here and waiting for everyone else. I would be more than happy to watch everyone else support that level, support the stock, build a high low, and then I would join the gang and join the action. But until that happens, I want to let everyone else take the losses if that was going to play out. I don't want to be the one taking a loss on it because I think this should hold up at that $11 level, if that makes sense. APT. CKF. That's been a good one, I think, Paul, hasn't it? Again, to me, that's really overcooked at the moment. But look, today, that's a daily chart. That's been a pretty solid day. I've been watching this. I've been watching this intraday, and look at that. That's off intraday. It's been quite good. And it rolled over there, and you had this little spike up and held the highs, had a pullback, retested the lows, and went again into the close. Again, here intraday has been some buying opportunities. It's been going sideways since then, and it's looking like it's getting rejected up around 670, which, looking at the daily chart, it's well and truly overcooked, and it has been for quite a while. And there's a bit of volume coming in here as well. So potentially there's some profit taking going on. Who knows? And it's up at a level highs at 667, which is pretty much where we are at the moment. We've had a high of 674, so a few cents higher, but we're right up at this high now. Whether it can break through, the fact that it's come off 525 straight up to 675, I'm a bit reluctant to think that that's going to break straight up and through. and just continue on, especially the way the market is at the moment. And we're well and truly overcooked there. So look, that's a nice chart. Anyway, there's been some good daily opportunities, especially around here. It's probably a little bit tougher to trade, but off the weekly, you've had this level through $5. I think I'm not even sure if we alerted this. Does anyone know if we alerted this? I'll just check, or when the last time we were looking at it, because we probably look like fools now that we missed out on that run. All right, the last time we sent out an alert on this was in Feb, 7th of Feb, and yeah, looking for it to a bit of a contraction. So 7th of Feb was somewhere around here, wasn't it? So at that stage, this is what we're potentially looking at here. We had this weekly move up. It's broken down the weekly, started holding up here. We're looking for potentially that to go through. There was no entry on it. But instead you can see it pop through and then straight back up again and started holding that higher low. So that was, we missed that completely. Mid-August. Yeah, no, exactly. I agree with you completely, Paul. I would be, if you've got this, I mean, it's times like this. This is where, you just got to admit yourself, you don't know what's going to happen. I don't know what's going to happen. No one knows what's going to happen to this stock. The only one knows what's going to happen. Well, you're only ever going to know is after the fact. So the fact that everything I said about it being up at resistance, it's been up at around that 675 mark, 670 mark. It's stretched into that mark. You can see in the overbought in the weekly and the daily. The daily's been overbought for a while. So looking at that, I find that if I was going to buy it now, it's a very low probability trade. But in saying all that, who knows what's going to happen? You can book some. I would always be happy to book some gains up here. If I had this, especially from a daily, say if it lifted through 570, I bought that at 570, be more than happy to book some gains. I probably would have booked some gains already. Knowing me, very quick to book a gain. I'd be more than happy to book some gains up here, but I would also just be happy to tighten up my risk. I wouldn't necessarily just sit there and go, look, I'll close out of everything. The last thing you want to do is, close out and see this thing just kick on, because you just don't know what's going to happen. It could just accelerate through. You might find that there's people going to buy it through that high. It accelerates through, goes to $7.50, $8, and then if it's stretched up there, you might want to get out. But the fact that I don't think there's ever just a reason, especially in stocks. It could be different in currency trading or something that oscillates a bit more. But stocks are basically made to go up. And when they don't go up, they go down. They reset, they go up again. They can consolidate for a while, but generally people are looking just to buy them. So they've got a bias to the upside on shares and things like that. So in saying that, this might be just all part of one big move up. It might consolidate sideways and have another blast up. You never know. So it's always good just to, rather than just close everything out completely, is just tighten up on your risk. As the probability goes lower that it's going to continue higher, I would be happy to tighten up the risk on that. I hope that makes sense, guys. So times like this, when you've got it's just in the unknown, when it's starting to look good and it's starting to lift, I would happy to have a bit wider risk on that, because I don't want to get chopped out. But that's when you enter. Take a bit wider risk, but when it starts, it's gone so strong for a number of weeks now. So, geez, 1, 2, 3, 4, 5 weeks now, and still looking quite strong intraday as well as on a daily chart. It's still looking strong. Times like this, I'd be happy to start to tighten up my risk slowly, tighten it up, tighten it up, tighten it up, and I wouldn't care if I get stopped out, because basically the way I'm trading is I'm putting my stops below. Potentially you can have it all the way at 605. I know it's 60 cents away, but if it comes to get you down here, something's happened that you really don't want to be part of it. Or if you get a lower high, you can potentially just get out off a lower high, because it looks like there's some weakness starting to come into the shares, and especially considering the overall picture of it. All right, I hope that's yeah, no, it is one of the very few stocks up today. Let me just go and see if we've got. There's quite a few that have gapped down on the open and then pressed higher. This is not what I look at. This is I'm just trying to find if they've. Yeah, there's not too many. Oh, this is stupid, isn't it? Intraday, weekly. So this is the few charts I got set. This is a 30-minute chart. No, it's not. It's a 5-minute chart. That's a 30-minute chart. Then I'll look at a daily and a weekly. It's the same bar. It's actually up today, but it's been in pullback, corrective mode, a good part of since July. So that's, when things are corrected so hard and you get a big down day like today, this is it's a very bad stock if it's going to continue down and get hammered today. So there is going to be some that are going to be up, but up when it's been a rising market. This one actually starting to look good. Evolution. This is one that I've just got my eye on, especially today. It's popped up. It's been some good action today from open to close. It's just rallied. That's up 5% today. Regis RRL. It's probably hard to see these stocks, by the way, guys. Sorry about that. Hard to see the charts. Saracen, another goldie. Look at that. That's actually starting to look good on the weekly. On the daily, I mean, potentially, I don't like this kind of action on the daily, but hey, it could be quite positive. I'd rather see it have a bit of a pullback, retest something around 180 or so, and then pop again. But either way, this one's got a tendency just to do that, just down, start holding high lows all the way up, not really retesting level, just grind higher. But it's actually not looking too bad, that one. FMG, it's actually up for today, but that's copped a beating over a number with pretty much a year over last year since the start of 2017. Anyway, we'll probably have to call it a day there, guys. If anyone's got any question, is my only green on my longer term portfolio, Northern Star. What's that doing? So I've got an intraday here. Yeah, that's green candle today. The weekly is it's holding up at these levels, which is not a bad sign. And especially the dailies come down. Dailies come from overbought when it was up at 925 thereabouts. It's come down, but it's holding, and that's your leg up there. That's your leg up from about 675 to 925. So, and it's holding the highs as the selling pressure is coming in from overbought to heading down to oversold now. So for me that's a pretty good sign. So if we start popping up, pulling back and building a high low, I'd probably be looking to enter this one and see if we continue on, just continue that move up. So the weekly is starting to get a bit. You can see how that's starting to go near vertical. So the fact that it could hold here, pop up, and it could catch people. It could just trap people. By trap people, I mean, if someone was looking at that candle there on the 3rd of October, buying it on the break of that candle, the market could pop up. You know that you're going to get people buying on the break there. They're bought on stop, buying into the share, and then it traps them. It turns around and just retraces on them, and it could just fall over from there and build a lower high on the weekly charts. Hope that makes sense here, guys. But that's only from that weekly action. I mean, is it worth? You just got to assess the risk. Is it worth on the daily looking for entry? If you're holding it, fine. If you're holding it, awesome. Yeah, it's great. Anyway, we'll just call it a day there, guys. Thanks very much for joining me. Where are we now? We're still down 123 on the ASX, so still struggling a bit. Let's just look at the intraday action, see what's going on. That's still looking it's going to just chop around this level here, so it's not looking too great to actually perk. I thought it might have opened down, retested, and then up she goes into the close. We've still got a few hours left, but it's not looking too positive to lift into the close on the charts there. Not at all. I mean, it could lift and break up to somewhere around 59.60, but I mean, I wouldn't think it's going to sell off through these lows either. At what was it, just after around 10:30, low at 59.12. I wouldn't expect that, but just be wary of it. We might find that there's a big down day today. Tomorrow we consolidate. If we consolidate around these lows, it could be more pain to come. But just keep an eye on it anyway. Guys, thanks very much for joining me. We'll see you again on Monday. So we'll see how we go tonight in the US and Friday. Good luck. And if you're not in the market, just be wary. If you are in the market, like Laurent and Paul have got a couple of goodies there. I'd be inclined just to tighten up on the risk, because if it's a strong if it's a strong share and it's a weak market, there's a chance that sooner or later it could just drop. But if the market turns and rallies hard, like the ASX picks up, if it's a strong share, it could just kick on with it. And either way, I wouldn't think if you're going to tighten up your risk, it's either going to be good or it won't even matter in the scheme of things. So, all right, guys, thanks very much for joining me. Enough of me ranting, and I'll speak to you on Monday. Have a great weekend. Cheers, guys. Bye.